Some people have said that big TradFi won't buy ETH. Institutional investors aren't interested. Neither are the RIAs. It's because the Bitcoin narrative is just so easy to understand, right? You got Bitcoin, you got gold, you got digital gold. Yeah, it makes sense, right? It's just gold, except it's on a blockchain, it's digital. Whereas Ethereum, okay, like what is it? Your internet bond is in play, a productive asset, like yield bearing thing, but we can't get access to this because these ETFs aren't staked. I want to ask you, what do you think is the narrative that will land? Do you think that this narrative is just too difficult for TradFi to understand, and it'll take a long time for these flows to start pouring into Ethereum because the narrative is more complicated? Or how do you see this discussion?
Yeah, I'd answer it at two levels. For one, there are a bunch of investors who really won't care. Like, try to talk to an investor about the details between NVIDIA's chip design and designs at AMD or something else, right? Like, no one knows, but many people want just exposure to that entire space. And I hate to be reductive about this, but crypto is a small part of many professional investors' portfolio. It's 1 to 5% of their portfolio. They needn't be bothered about the peculiarities of the differences. They just want exposure to this thing that is public blockchains that have a lot of use cases: digital gold, a new internet, decentralized social, decentralized gaming, DeFi, stable coins, NFTs. They just want exposure to that. And so for many investors, the starting point is just, look, public blockchains are a fundamentally disruptive technology. You want to own the space. Don't make the same mistake you made during the internet bubble of buying Ask Jeeves and missing Google. Just own the space, right? And I think that's a fundamental narrative. Other people do want to understand it, and they want to understand the differences. What I've found is that if you just take a moment to describe the different design choices that the Bitcoin blockchain makes and the design choices that the Ethereum blockchain makes, people understand that they're significantly different, and therefore they have significantly different use cases. And that's like a 2-minute sale, but advisors are willing to sit through a 2-minute sale to understand how technological design choices lead to different use cases. I think ultimately they will see it as a sort of platform for applications that leverage public blockchains and killer apps that are built on top of that. And I think that can be a narrative that works.
Okay, so first of all, there's the very reductive take, is what you're saying, which is, look, institutional investors are not like the maximalists you've seen on crypto Twitter. Okay, they will look at an asset class and they'll say, "I like Bitcoin and I also like Ethereum, and so why not buy both?" And of course, this gets me some more exposure to the asset class, and I don't want to miss out on everything else that's going on with tokenization and all of these other narratives. So they won't be as loyal, let's say, as some of the crypto Twitter accounts in terms of what asset that they're going to purchase. So that's like kind of the reductive case. But then you mentioned the RIA that's trying to actually understand what about Ethereum is kind of different versus Bitcoin. There's certainly some, world computer you could talk about. You could talk about the cash flows, the internet. I'm wondering about that 2-minute pitch. So what does that 2-minute pitch actually sound like for an RIA? Like, do you get into discounted cash flows and do you talk about the burn? Do you talk about any of these mechanics? Do you talk about layer twos? It's just such a different world for me to try to think about, because we're so used to talking about like in the weeds types of concepts. Just don't even know how that 2-minute pitch would sound. So could you give it to us?
I'll give you the 2-minute pitch, and then you guys will poke holes in it. So that, I mean, look, the way I start is by saying, because most of these people have no idea why there's more than one crypto asset. They think of Bitcoin and Ethereum like they think of the dollar and the euro, because they're
Mm.
both currencies. And what I tell them is that's the wrong way to think about it. The right mental model is to think about different software companies. We accept that different software companies use software in different ways. Salesforce uses software in one way, Microsoft uses it another way, Snowflake uses it another way. And there are a wide variety of software companies that optimize software to do different things, to do CRM, to do Word, to build Slack, etc. Crypto assets are the same. Every crypto asset is two things. It's an asset and a blockchain. The Bitcoin asset, the Bitcoin blockchain, the Ethereum asset, the Ethereum blockchain. And those blockchains can be optimized to be good at different things. Bitcoin was the first, and it's a very simple piece of software. Basically, you can send Bitcoin, receive it, hold it, destroy it, do some very simple if-then statements. Every decision it makes is based around the concept of maximizing security and decentralization, right? So as an example, it doesn't upgrade very often. Why? Because upgrades introduce some level of technological risk. The downside of not upgrading very often is your software is static and it can only do a few things. But if you're designing to be digital gold, all you care about is that it's extremely secure. And so every decision you're going to make is going to be, does this ensure that it's extremely secure? You don't care if it can do a lot of things. You just want it to be able to store wealth. And that's what Bitcoin is. Ethereum looked at Bitcoin and said, it's cool that you can store wealth and teleport it around the world. What if we could program it to do everything? What if we could program it to act like the New York Stock Exchange? What if we could program it to act like a lending agent, like a bank or a prime broker? What if we could program it to host sort of who owns digital art or host digital dollars? There's a trade-off to being that flexible, which is that on the margin, it's less secure. It's not going to be, it's going to update more. It's going to take on more technological risk in order to be more functional. And so what I tell advisors is, if you want to invest in digital gold, that's Bitcoin. If you want to invest in using blockchains to do many more things, that's what Ethereum is, right? You have Uniswap that's built on Ethereum, that's trading billions of dollars of crypto assets. You have stable coins that are built primarily on Ethereum that's putting US bank accounts on every phone everywhere around the world. You have BlackRock that's moving funds from the traditional system into the crypto system, and they're choosing Ethereum. There's more to finance than just gold. There's everything else. Bitcoin is gold. Ethereum captures the rest of this market. And if you want to invest in crypto, you own both. If you want to invest in one or other, you pick one or two. But that's usually how I start describing it to people.
You know, Matt, I think you just kind of gave me flashbacks to my first year of getting into crypto in the first place and just having the aha moment that was like just discovering what these things were. And I don't get too many of those anymore because it's been so far down the rabbit hole. So clearly you've been practicing this very articulate pitch. So thank
Yeah,
you for
that
that.
pitch is honed. I honestly,
Yeah.
I don't think that is too difficult to understand. I mean, the way you said it,
Seems
Matt,
makes sense to me.
it makes sense to me. Where can I buy an ETH
Yeah,
ETF,
where can
guys?
I buy?
How do I do that?
Yeah.
Okay, so one other piece I want to ask you about, because these Ethereum ETFs that have been approved, they are vanilla ETFs, right? And by that I just mean there's not staked ETH, there's no kind of yield. Um, and I was talking to James, like it'll be another process of approvals before we get some notion of a staked Ethereum ETF. There's really no timeline for that. So for now, do you kind of like park the yield narrative, productive asset narrative around Ethereum? Because I didn't hear you mentioning it in the kind of the 2-minute elevator pitch, but is that something you add later? Do you think that's important, a differentiator from Bitcoin, the asset, and how should investors kind of understand that?
Yeah, I absolutely do think that's important. Usually you get into that in the questions. They also talk about carbon footprint. That's a common question, and you can talk about that. That's a very strong narrative for this audience.
Like the
These
ESG thing still kind of matters
it,
in
it,
crypto circles?
it does. It does. You got to remember, financial advisors serve individuals, and if you serve 200 individuals, there's going to be a cadre that really cares about ESG elements within your clientele. And so they need to have answers about that. And Ethereum fits
That's so
neatly.
funny. I haven't heard that narrative much lately, at least in my circles. But it is very true. You could, for somebody that's very ESG conscious, say you've got the energy consuming asset, which is Bitcoin, and you've got the clean, no energy use asset, which is Ethereum, and maybe that'll matter to some TradFi. I do not know.
It comes up at every conference that I talk about crypto, and I describe it like, gas powered cars and electric cars. Different people make different choices. Yeah, so I think you have all of those narratives. I do think usually I get to talking about revenue and a cash flow driven asset before I get to talking about yield. Most professional investors who are allocating into the space are looking for 2x, 3x, 4x returns. They're not looking for 4% returns. Those are sort of nice, but they're a value add. We don't often get all the way down to staking, but the revenue aspect really matters for a lot of people. The fact that the more people who use Ethereum based apps, the more valuable Ethereum becomes. just clicks in a way that it's more difficult to click in Bitcoin. I think I can get around, I have a way to talk about it in Bitcoin that I think resonates, but the primacy of Ethereum consuming ETH as people use the apps and how similar that is to stock buybacks, I think really is an important narrative for this group.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.